The demand for loans that we're seeing is really interesting out of this survey. When you look at this data and you see that demand for credit is beginning to kind of weaken materially, what does that tell you about kind of where we are in the cycle, how close we are maybe to the bottom?
Yeah, I think it's telling you that demand growth in the economy is still weak, particularly in the industrial sector. And I think that squares, generally with particularly the hard data and the German data as having been very soft.
Yep.
But you also see in the credit standards, which I actually think are the more important part of the survey, that things are still tightening, but things are now tightening at a slower pace. And I think that also gives you a little bit of hope that we are through the worst in terms of the credit impulse, and that the forward-looking indicators are beginning to look a little bit better. And I think that squares also with what we're seeing in the surveys, in the PMIs, in the more forward-looking surveys that are a little better. So I think it's consistent with the spot data still being very weak, but the forward-looking indicators looking a bit better.
So if you're Philip Jari, if you're the chief economist over at the ECB, you're citing this survey as being very important. What would your take be to the Governing Council when it meets later on this week?
I think for now, I would say that we need to see more data to confirm that the inflation deceleration is on track. So I think we're very unlikely to get a big shift in the message this week. But I do think that the weakness in demand that we are seeing, I think the indications on wage growth slowing, and I think the inflation projections all suggest that the first rate cut is coming nearer. We think they will reiterate this week that we will see a lot of data by June, that we will be able to determine by June whether to start lowering interest rates. And I think the cut in June is very likely. And the debate now really is shifting towards the pace, whether you might want to go quarterly or you might want to go back-to-back or do a mix.
What do you think?
I think that a back-to-back pace is more likely, at least initially. I think we have strong evidence that policy is restrictive.
Yep.
I think we are gaining confidence that inflation is coming back to 2%. The Governing Council has decided to wait a bit longer than some members would have preferred. And so I think once the process gets underway in June, I think the path of least resistance would be to do a series of cuts initially, so June, July, September, because everyone, I think, can agree that even after 3 cuts, policy is still restrictive, and then you reassess in September where you stand.